Hey there, everyone, and welcome to the Final Bar. It's Wednesday, July 31st. Happy Fed Day. I'm your host, Dave Keller. I'm the Chief Market Strategist here at Stockcharts.com today. As you may tell from the hotel-like background, that is not a virtual background. I'm coming to you from Las Vegas, Nevada, here in town for the Money Show for the next couple days. If you are attending the Money Show, which I hope you are, please stop by and say hello. We'll be doing a live recording of this show on Friday, interviewing Mary Ellen McGonigal. And then Saturday morning, 8 to 10 a.m., I'll be doing a 2-hour masterclass talking about routines and sharing some of the things I do every day, every week, every month to make sense of these markets. So I hope you can join me if you're here coming to Las Vegas for the Money Show. And please make sure you say hello at one of the mixer cocktail hour type of things or during the presentations for sure. Let's get right to the market recap here. Of course, as we talked about, right? I mean, the Fed day, while an important day, really wasn't the story here. This is more about earnings. This is more about the general trend that we've seen, this rotation away from growth and into value. It's not all, I mean, I can't say it's not about the Fed. And I would say while today's Fed decision was sort of a non-event, the comments that we heard from Fed Chair Powell certainly resonated with investors, talking about seeing a path toward a first rate cut in September, as long as inflation data continues to make the progress that Powell and others have observed. What's interesting is if you look at the S&P at 2 p.m., which is when the kind of a non-report, right? The Fed announcement, which is no change, kind of expected. We rallied from around 2 o'clock to 3 p.m. But going into the close, it really wasn't like this extreme move. And that what that tells me is that generally speaking, what we heard today has kind of been priced into the market. And that's sort of what we've talked about, right? The Fed funds futures were pricing in essentially zero chance of any change to rates today, but an almost 90-some% chance of a first rate cut in September. I've not checked today since we had the press conference, but I would imagine that's even more likely according to the futures market. But look what happened to stocks by the end of the day. The NASDAQ composite up almost 3% today, up 2.6%. Now, of course, as a medium-term or long-term investor, I'm thinking of this as a bounce higher after a long, month of deterioration through the month of July. Nvidia sort of popped higher after being down about 7% yesterday. So volatility is real. And this is one of those things where, the VIX is currently down 1.33 to about 1640. So the market's telling you volatility is going down, but this is one of those. If you know like the old Weather Channel thing or any of those sorts of weather apps where it tells you the actual temperature and then it feels like. My wife was always big on the what's the feels like, because she didn't want to know what some reported number was. She would know, like, when I walk outside, what does it feel like? So while the VIX is 1636, I would say if this is the Weather Channel reporting, it's like the VIX is 1640, but it feels like 60 is essentially what the market feels like to me. I feel like the VIX is artificially low relative to the actual experience of investors. And when Nvidia is down 7%, up 10+% day over day, that is volatility by my book. Having said that, again, the NASDAQ leading the way higher, the S&P 500 up 1.6%, the Dow up about 0.25%. So even the value areas of the market, which have been leading here in July, also getting a bid pushing to the upside. Mids and smalls both up about 0.5 to 0.6%, kind of similar returns there. And again, the NASDAQ outperforming all of those. And that is one of the few days, if the only day, we've been able to say that here in the month of July 2024. Interest rates continue to come down. That makes sense if you think about what the Fed is telling you about lowering rates. They're talking about lowering the short end of the curve, but usually has ripple effects over the entire curve. And so you're seeing the 10-year point go down again. Not a ton, though. Still around 4.11, we'll call it. So still above 4%. The 5-year yield actually finished almost exactly at 5%. Long bond yields around 4.37, we'll call it. And again, all of those are down slightly. Bond prices, of course, up a little bit, around 1%. The dollar index down slightly, which is part of this sort of risk-on move that you experienced with today's trading session. Look at how commodities opened higher and then traded higher through the course of the day. That's the DBC, which really combines energy like crude oil and natural gas, precious metals like gold and silver, soft commodities like grains, wheat, and soybeans, and others. But it's energy is certainly the number one component when you look at the weightings. The USO, the crude oil ETF, was up about 4.4%. Copper prices up 2.5%. Look at gold and silver, both up about 2% as well. So those areas of the market continue to show strength. We've talked about the resilience of gold, how gold stocks have run higher. We've got some gold stocks reporting earnings this week. I would certainly keep a sharp focus on the precious metal space. Cryptocurrencies really rolling over through the course of the day today. Sort of an interesting day. There's I don't know how big of an issue this was. This Bitcoin 2024 conference is happening. There's a deep fake video of Elon Musk talking about giving away cryptos for free or something like that. I forget what it was, but certainly the market trading lower through the course of the day. Bitcoin currently just below 65,000. And what's interesting to me as a data point is, again, what we've seen over the last week with Bitcoin is another failed attempt to get above 70,000. That's kind of the ceiling here. And I believe at some point that ceiling will be broken and we'll see Bitcoin well above 70,000, but not happening today. You're actually seeing continued rotation away from that key level of resistance. Let's look over at the 11 S&P sectors today. Technology and then everything else. Tech was up 4.2%. Now, this is driven in no small part by Nvidia having a pretty incredible gain. Huge weight in the XLK, huge weight in the NASDAQ 100. Both of those feeling the love as Nvidia has a nice rebound after accelerating to the downside through the course of July. So the XLK up over 4%, strong up move. The XLY consumer discretionary up about 1.5%. Utilities number 3 up 1.3%, kind of a defensive sector there in the 3 spot. Looking at the bottom of the list, 4 of the 11 S&P sectors were down. I feel like that has been a common pattern. I feel like I've heard myself say that many times here recently. Healthcare, your worst performer, only down about 0.4%. REITs down about 1/3%. Consumer staples down 0.22%. So some fairly defensive sectors down there. Just looking at the Magnificent 7 stocks, you can see Nvidia really the story today, up about 13%. Tesla up 4.25%. On the downside, Microsoft, which actually reported earnings yesterday after the close, down about 1% today. So if you're looking for the growth trade to reemerge, or looking for a stock like Microsoft, which has been in a short-term downtrend, to rebound to the upside with earnings as the catalyst, you didn't get it today for sure, right? Microsoft actually continuing to show some weakness. We did see strength, obviously, in other growthy stocks. And let's go to the daily chart of the S&P 500 and see how today's move fits into the big picture. What's intriguing to me is if you look at the bounce today, or we've spent the last week kind of in this 5,400 to 5,500 range, and that's after the gap lower where we had the first close below that trend line support. We tested the 50-day moving average. We've had about a week of attempts to really close below the 50-day and make a decisive move lower. We haven't really had it. Today's bounce higher actually is a small gap, pushing the price briefly above that trend line, but closing back below. I think through the course of this week, as we get through the Fed meeting, which we now have, as we process what we heard, as we get through Meta and other companies reporting earnings tomorrow on Thursday, we have Amazon and Apple. So still a lot of more news flow to come on the earnings front, and a bunch of other names I didn't just mention. The question is, does that get us back above that trend line? And also, I would say, do we hold 5,400? That, for me, is really the line. That's the line in the sand. That's the level. And I like having a level like that. The line in the sand approach to me is you look at the chart, you set a floor, right? As long as we remain above level X, I'm just not going to worry that much. And that is your freedom to think about other things and focus on opportunities, focusing on, tactical movements and actionable trading ideas, and not worry about the big picture being too bad because it's remaining above the line in the sand. S&P below 5,400, which is where I have an alert set, and I would encourage you to do the same. That's where it tells me, at the very least, rethink the positioning, rethink that risk on field that the market has had. Think about the fact that that big move down from mid-July to late July may have been wave A or wave 1 of a downtrend, and that break below 5,400, I think, would clear the way to further retests of support on the way down at levels we haven't talked about really in months. But for now, gap higher today, led by growth. And again, that's a counter trend move to what we've experienced so far in July. So when you have a one-day move like this, it's all about the follow-through. Do we get further upside tomorrow and Friday? And that might help us get some clarity by week end. Wouldn't that be nice? So what's interesting is as you look at the S&P 500 bouncing off of support at 5,400. I'm going to keep this right here. I'm showing you a different chart here. This is the equal weight S&P ETF, ticker RSP. Look at how good this chart looks. It's actually made a new all-time high today. Now, it did close lower below the open, and it did not stay above the peak from mid-July, which is around 172 for the RSP. So we did break above that level and close below it. So not a decisive breakout, but I just want to show the contrast of how the S&P 500 is still well below 5670 or so, the all-time high from a couple weeks ago. Equal-weighted S&P is actually already testing those highs, if not breaking above them slightly today. So again, the equal weighted measures, the measures of breadth, all very, very robust here. And again, today was a counter trend move where mega cap growth kind of working a little bit in a way that we haven't seen in about a month, right through the month of July. That's not been the story. So very interesting reversal day. It will be interesting to see if that reversal has legs and we have further upside to be had after that. I just want to briefly look at the charts of gold. And maybe crude oil here, time permitting. We'll look at the GLD just to get a sense of things. And, what I want to highlight is just the fact that the momentum remains just remarkably strong. And it's what I love using RSI and what you might call the range rules. Don't worry less about the swings and take a step back from your monitor, either physically or mentally for a moment. Think about the overall trend, right? When the RSI is tending to range between 40 and 80 during a trend, that is a bullish trend by definition of momentum, right? Because the up moves are strong up moves, getting off into the overbought region, as we saw most recently a couple weeks ago in mid-July. The pullbacks aren't getting an RSI below 40, which means we're sort of remaining in that bullish momentum phase, right? With the RSI remaining above 40. So most recently, we're seeing that here on the June and July pullbacks, which while we broke briefly below the 50-day moving average, I would say overall that's still pretty constructive. Now gold is once again in the realm of new all-time highs. The momentum is strong but not excessive. We're above two upward sloping moving averages. This seems like a strong chart that's continuing to get stronger. We do have an earnings coming from a gold company today, Agnico, AEM. We'll look at that chart here in a few moments. Let's get to the equity charts. We'll start with Nvidia, right? And so, again, if you take a step back, and this is what I love about looking at charts on different time frames, right? I always start with a 2-year daily chart, which means all the noise that we've experienced in the month of July is just this little bit at the end of the chart. I want to think more about the big picture trend and reflect on the fact that Nvidia has been above an upward sloping 200-day moving average since February 2023. That's about a year and a half that we've had an incredibly consistent uptrend with no retest of the 200-day. We've had some pullbacks slightly below the 50-day moving average, and right now it's looking a lot like the low in April in terms of where the RSI ended up, in terms of what the price did relative to the 50-day. For now, this gap higher is really starting to make it look a lot like that mid-April low. And I can't guarantee we're going to make a new high and push to 170, which would be a similar measure to what you experienced in May and June. But it certainly for now looks constructive with today's gap higher, again up about 13%. Now, what you have to remember looking at the candle chart of Nvidia, percentages can be super confusing. So if you're looking at today and saying Nvidia up 13%, awesome day, so glad I own Nvidia. Let's remember, right, if you owned Nvidia back here in the 130s, we're still down in the 1-teens, right? So we're still $20 below the peaks that we experienced in June and July. So one-day percentages often can make you feel really good or really bad because of the one-day return. One of the benefits of charts is you're not just looking at one day in a vacuum. You're not just looking at Nvidia with a plus 12.8% return today and thinking, fantastic, this chart's obviously bullish. We have the benefit of looking at the trends over time. So I would say Nvidia still, with today's gap, impressive, but you still have more to prove, right? Let's get above the 50-day moving average. Let's get above the swing high from a week and a half ago, which is here around 124. That's where we stalled out after that brief bounce in mid-July. Can we get back above that level? And then I think we can talk about a retest of the previous highs. Then we can talk about accumulation really taking hold. For now, we're bouncing up in a counter trend move, I would say, below a 50-day moving average. Let's see if Nvidia has sustainable appreciation above this level. MPWR, another semiconductor stock, just want to highlight, this is up about 10% as well. If we look at the one-year chart, I mean, you probably label what's happened here in the last couple weeks as a bull flag pattern, I guess is how I would label it if I had to label it as a pattern. It's when you have a big run higher, you have a parallel decline of lower highs and lower lows. When you break above the trend line from the highs, that suggests whatever move led into that pullback, you then have a consistent move or a parallel move, a symmetrical move beyond that level. So that tells you Monolithic going a lot higher than we've experienced just today. I would say, just based on the deterioration that we observed in the last couple weeks, I would love to see an MPWR get above its July high as a sign that there's further accumulation. Maybe we get a higher low in there somewhere that would tell me things are holding. But look at how this has held the 50-day moving average. We've had a close or two below, but we've immediately seen buyers come in on those breaks below the 50-day. The RSI has not even touched 40 over the last couple weeks. So overall, I would say this is still a chart within a positive trend and certainly appearing to rotate higher. Now, Microsoft, given the opportunity to pull an Nvidia or a MPWR and gap higher today after earnings, did not do that. Microsoft actually down today. It was down in the aftermarket today, continuing to go lower. I was wondering, given the bounce in Nvidia, would Microsoft and others get a sympathy move to the upside? But Microsoft actually down another 1%. So from a tactical perspective, I'm not seeing enough support here yet. I'm not seeing signs of accumulation. I'm seeing further signs of distribution. If it was going to bounce, I feel like today would have been that day. So overall, I'm eyeing the 200-day around $400. I'm eyeing the April low around $390. We have a bit of key support levels not too far below current levels. Let's keep an eye and see if those end up being an interesting place to be. That is not the ticker for AMD, but this is one other to talk about, and a couple more charts to talk about to finish our show today. I would say with AMD, right, a semiconductor name, these two charts actually have some concerning short-term price action. Look at all the black, the solid candles that we've seen in AMD over the last 3 weeks, right? Almost all of the days have closed below the open, with one particular day as an exception. Everything else we've closed lower than we opened. So talk about distribution happening day to day with this particular chart. Today we gapped up just above 150, and it's all of a sudden felt like Nvidia, right, we're going to gap higher, really build some momentum to the upside. I'm watching the 200-day moving average. We traded almost right up to it, but by the close, we actually finished down around 144.50. So instead of gapping and running higher, we actually gapped and sold off. I think that's a concerning sign for AMD, certainly in the short term. I would also say Ceasars. I'm here in Las Vegas. I'm not at Ceasars, but I am at a Caesar property at Paris, Las Vegas. We have here an example of what Martin Pring would call a Pinocchio bar. This is a shooting star candle that happens at a key level of resistance. Here's the 200-day moving average around 41.10. You can see we gapped higher and opened around $40. We traded all the way up to 42, but by the close, we're right back to 40. So overall, I would say this is a real concerning sign, encouraging gap, but the action today tells me investors and certainly traders are selling that gap. You can draw a horizontal line from these peaks in late June and mid-July. It's right around where we ended up today. So with the opportunity to break above that resistance and close above the 200-day did not happen. Sellers pushed the price right back to the lows. I think that's a concerning development for CZR from a technical perspective. Two other charts. That is also not the ticker for SBUX. That's it. SBUX, another one, gapping higher and trading lower. Gapped and traded above 81, but actually closed down to the 50-day moving average around 78. I don't like that look. NCLH, Norwegian Cruise Lines, another one, trading higher, opening higher, but closing lower through the course of the day. So some of these earnings names that originally first thing in the morning actually seemed like gapping, and then that was encouraging. I'm discouraged when I see charts like this, gapping higher on earnings, but trading lower through the course of the day. That shows me that traders are selling on that strength. They're not buying into that strength, and that usually means any uptrend momentum has to be questioned. To finish off here, three charts I'm watching after the close here. We have Meta, which was up around 2.5%. In the after hours, they reported today. You can see in the after hours session, up about 7%, currently trading around 508, which is up here back above the 50 and the 20-day moving averages. So encouraging reaction to Meta's earnings. Meta is the only sort of Magnificent Seven name reporting today. Tomorrow, after the close, we have Amazon and Apple. So our cup runneth over with earnings-related charts to pay attention to. So keep an eye on that one. Qualcomm is another one reporting after the close today, actually trading slightly lower. A lot of semiconductors reporting today. Lam Research LRCX is another one. This is also down about 2.5% after the close today. Again, I haven't had a chance to debrief on some of the numbers here. I was on the flight down from Seattle, but overall, aftermarket, both of those are trading lower after earnings. I would keep an eye on those because the story today, of course, Nvidia and others being able to gap higher on earnings today after the close. We're actually seeing the opposite from some of these key semiconductor names. AEM, Agnico Mines, Agnico Eagle Mines, making a new 52-week high today, up about 2.6%. They did report after the close today as well. It's trading slightly higher in the aftermarket session, but this is a stock that's actually making new all-time highs today. Gold chart, the chart of gold, spot gold, showing strength. Gold stocks, the GDX we've talked about, still showing strength, and I'm encouraged by names like AEM, beating earnings, gapping higher. That's kind of what you'd need to see in an area with improved momentum, but not excessive, and improving relative strength. That's maybe the most important thing. In an uncertain market, when it feels like volatility is concerning, look for charts with relative strength, the relative performance going up. That means they're outperforming the benchmark, which means regardless of what the S&P is doing, charts like this are actually helping you outperform that benchmark. Folks, that's a wrap for the show. I want to thank you so much for joining us every weekday after the close. Thanks for hanging with us this week as we record some shows on the road in Las Vegas. For Stock Charts in Redmond, Washington, I'm Dave Keller. Be well, stay safe, have a good night.